Hello champs, we haven't heard each other in a while. Today we are going to fix that. And if you remember, in the previous video we were discussing my plans and scenarios for shorting the jaw, and they turned out to be successful. I had a few successful shorts on jaw. If you follow my Twitter account, you should know that I shared that in my posts. Today I have some plans and scenarios for Injective. If you know, I posted also about Injective that I was shorting it here, and I posted this chart with the global, when the price approached this global range resistance level, and I showed you this yellow zone. This was supposed to be the zone where the price is going to be deviating and reversing. On the lower time frames, it was clear to me that the price is reversing here, and I was eager to take that short, and I took it. I shared it on my Twitter account from 9:14, and I closed it at 775. Took a 15% move down towards this purple trend line. And why? Because I know the market structuring and how the market price action works, meaning all the price, it doesn't matter how hard is the movement, the price always comes back to for the retest of the trend line sooner or later. So it was obvious to me. This was the first take profit level. The second was here, but I took it earlier because I already had a good profit here, and I was expecting the weekly to switch, and there had to be possibilities for the retracement. So I took my profit and I feel good about it. And what next? What to expect from Injective next? What do we have here? Let's find some of the insightful patterns here, or things that can indicate us about the further price action of the Injective. Definitely we have what we like to see, this oblong red candle. And I told you on my Twitter account that I want to see how the weekly is going to close, to find out whether this weekly is going to be aggressive. At the first sight, it looks like it is aggressive, but if we zoom in, we see this last small wick here below, and this means that there is high probability that this week we are not going to sell down. Why? Because it is kind of elusive and deceiving one. The candle is oblong. It tells us that we are going to go lower, at least half of the size of this candle, and usually 90% of this candle lower. But it is not going to be, in my opinion. Let's enable our EMA 7 and 30 that I use and that helped me perfectly. We stand somewhere here upon the support of this trend line and of this 7 EMA, I guess. Yes, 7 EMA. And definitely, if this week we are going to fall down, how low we are going to fall, at least to this towards this 30 EMA line. And this is okay if it is going to happen like this. If we fall down immediately this week, okay, I'm going to buy spot here. It is going to be a good opportunity to buy spot or even long. Definitely you're going to win, and it is not going lower than this trend line, this green global trend line. But this is the plan B for me, and I'm not worried. I'm going to make money here and make my profit anyway, but I'm expecting for a good short here. Why? First of all, I told you we have this insightful candle that tells us that we are not going higher than this yellow zone, this yellow resistance zone. So how can we use it in our favor? Basically, a lot of people right now see this giant candle and they say, okay, this is the reversal that we have and we are immediately going down. But we have this little inside, this little wick we have tells us that this candle is not that aggressive and that it will play out, probably not immediately. Why? Because first of all, we probably are going to try and go higher, and we'll meet, for example, this trend line on the daily. Oh, let's take a look at it from here, from the daily. We have this trend line, and we will try to do something like this, retest here and go higher, retest it, and probably will be going back down, pulling back, and then getting back up and retesting this. And this trend line already is going to be at the same level as almost at the same level as our global resistance line, this area between $9 and $10. And this is going to be already a good short opportunity. Let's enable our super trend, and as we can see, super trend, we broke our long-lasting trend, upside trend, and now we are retesting it. And if we come here and retest it, and this line is going to be a super trend resistance, is going to be somewhere here, and we are not breaking it, that would be a huge trigger to short here, and we will have the reversal reaction. If we, for example, abruptly break it and get back down, still locally would be a great opportunity to short, but in the midterm it is going to be retested, and we will have to follow further. But why I am so sure about this level and think that we probably are going to go for a recovery first and then going down. Why? Because we are approaching the monthly candle switch, and you know what that means. Basically, I don't like even engaging in trading upon these significant candles crosses, but what we can see here, let's remove all the drawings. What can we see here? We had a massive bullish candle here, green candle, and it met this huge range resistance into the higher range resistance here upon $10, $9 and $10, and we retraced significantly. And what the price, if you know how the market price action goes, how the price goes from the liquidity to liquidity, and you understand the market structuring, so basically what do we want to do to provide a great market structuring on the chart? What do you want to draw here, the market makers? What do they want to do when we are approaching to the monthly candle switch? Definitely after such a huge retracement to the downside, we want to get back closer to the monthly. In 5 days we are switching the monthly. We want to slowly start recovering back closer to this resistance zone. Why? Because we want to be somewhere here, and when we are switching this monthly into the new one, it is going to start either of two ways. It is going to go up, retesting it, maybe with some fake out here into the yellow zone, and then retracement back to the downside. And or it is starting with the downside movement, a little downside movement, then recovery back up, retesting this resistance, and then we are smacking back down and absorbing this movement. And then it is going to be the reversal candle on the monthly, building reversal candle on the monthly already. That is why we want to recover a little bit towards this resistance that we got rejected from into the monthly candle switch. And how low it can go, definitely from now I can only assume where I am sure that the price is going to come. This is, let's find it on which time frame this is. Let's remove this bands. I see it. We had inefficiency here first, and we already recovered it, and this is one of the reasons that I was shorting. First, this trend line that we had to recover, and then this inefficiency untraded zone, and we needed to recover it, and we already recovered it. It is okay, and now we have left only one clearly visible zone that has an untraded area. And if you switch to the lower time frame, for example at 4-hour time frame, you will see that area more clearly. Let's remove these circles and we will see it here. As you can see, around 595 to 611 we have an untraded inefficiency here, and we will come to recover it sooner or later anyway, whether you like it or not. So basically, if the situation goes according to the scenario I described right now, meaning we are going into the monthly switch higher, then retest this zone, and again a lot of resistances, crosses are going to be here. As you can see, if we approach it, definitely, as I said, if it goes according to my plan, then we are going to do something like this, or maybe not touching it. Maybe it depends how the super trend is going to react. Maybe we are going to meet it here or here, and if we get rejected from the super trend, this is a significant. If we see the reversal candle, the red one from here, and we do not break this super trend or somewhere here, we are it is a great opportunities and signals to get short and hold it right. For example, at least from here, it is 30%. It is the least we can go. Of course, you can, if we retest from here, from this yellow zone, okay, we can have another 15%, like I already took 914, 98 to $777 back, at least. This is the least. The final goal for me is to recover this inefficiency around $6.10, $6, and the ultimate low situation, if we go according to this plan, I'm expecting us to go for the retest of this global trend line, and I am sure in the long run we are going to retest it. It only depends when we are going to retest it. If we go immediately down, then we are going to retest it immediately. If not, if we only come to this zone and get the recovery, then we maybe will retest it somewhere here and go for the break of it, or maybe we'll lose it, and depends on the market and Bitcoin how it is going to behave. So basically, you have this scenario in this plan of mine, and you can use it at your disposal. Follow this global trend resistance zone of between $10. If we break it with a fake out and dive back under and close on a 4-hour time frame under this yellow zone, then definitely it is a trigger to short. And I told you, this red candle is telling us, is giving us an insight that we are going lower, but probably not immediately. If we go immediately, we will dump heavily, and it would be great to buy somewhere here in this zone, safe, especially on spot. But I think we are going to go for the retest, and then we are going on the monthly squeezing back down into this inefficiency. So keep it in mind, guys, and if it's useful, use it at your convenience with the right risk management, and not the fanatic use of leverages and margin sizes. Be careful, guys. See ya.